Guys, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at the technical charts and try to understand what happened in the market during the day and then plan for a better trade for the upcoming day. There's Jan 16th, Tuesday, tomorrow, 2024. So we had a big breakout day today. Market at new all-time highs. 22,000 is taken out by the Nifty. Going into the wrapper, we'll go straight away to the charts. Plain charts without any confusing things. We would basically look at the candlestick. First the Nifty, let's begin with that. So the Nifty candlestick, you can clearly see it's breaking out of the range, and the candlestick is absolutely, it's a bullish candle, and it looks like almost like a hammer, except that the wick is not that long, and also there is a gap. That's a pro gap. Gaps are powerful, that could act as supports when it is retracing. Look at Banknifty, which was making small candles all this time. It has a wide range bullish candle today. It's the fourth day of bouncing up, and same with Nifty also. Fourth day of making new highs and new all-time highs. The second day of making all-time highs, and 22,000 is conquered. Beginning of December we were talking about 20,000. 2,000 points have been taken out just like that in a month. That's the kind of move that we are talking about. Once again, if you look at the charts, you can see that we have made almost a 31% move from the swing low of March 2022. And the recent swing low, from there we had made nearly 15-16% on the Nifty. In Banknifty we made 26% from the previous swing low, and from the last swing low it's around 16%. So we are in a trend line on the top of that, actually breaking out of that into unknown territories, because Fibonacci extension also is it's over now, and now the only thing that could be looked at for supports would be the moving averages in the gaps formed, and for the targets it would be the range size. So the size of this range is nearly 400 points, which would mean that 22,250 could have some resistance, which is the target of this breakout if it further moves out. And then from there the resistance after that would be 22, 300, 400, 500. Right? These are all rounding numbers, and 2,500 could be having a much more resistance. It's somewhere midway into the 20K. That's about the resistance on the upsides. The first major support down will be the gap that's formed today. That's at 22,111. If that's breached, then we come back to the 78 retracement level at 21,600, and then very close by at 21,525 you have the 20 exponential moving average. That could be good support. It is not breached during the retracements of nearly 2% that happened. And if that's breached, then you come back to the 21,300, which is about 23.6 retracement, and then after that 21,000 rounding number is a 16 Fibonacci extension level, and also confirms of that with 50 exponential moving average at 2,900. So 2,900 to 21,000 is going to be a good support there. It has multiple Fibonacci extension and Fibonacci retracement plus exponential moving average plus a rounding number, so all supports that's there. That's how it goes for the coming days. Again, Banknifty similarly, it was at the top of a trend line channel. It retraced, but 3.5% stopped there. Lost the 20 exponential moving average, but conquered and flying high from there since last 2 days. And today it has formed a very wide bullish candle, confirming that it is the reversal from the retracement is for real. And it's conquered the 48,000 which it had lost earlier. It's a big rounding number. It's called the crucial support. If that is breached, then you have the 47,566, which is the 20 exponential moving average support, and then after the previous swing low at 47,000 can be a very good support, which is the confluence of 73.6 Fibonacci retracement level as well as 61.8 Fibonacci extension level. So upside, since the Fibonacci extension is completed, it's the first resistance is clearly the 48,600 all-time high, and can go further and heal the 49,000, which would be the top of the channel. The resistance after 49 could be 49,500. That's all we can say. It's a gray zone. It's a zone of unknown territories. But looking at the so here it's 1,000 points is the width. So another 1,000 points from 48,600 would mean it may come close to 50,000 as well. If you look at that, it's a target. Similar downside, first we already talked about the 47,000 circumference of supports, and 20 exponential moving average is coming at 47. We already seen that upside. We talked about it. So that's about resistance and supports of the Nifty and the Banknifty. Let's just come back to the wrap up. So we had a great day. Big, not 1%, really close to 1% positive day on Nifty, and almost 1% day on the Banknifty as well. Banknifty is 449, but a few points less of 1% more. It's a big day, a big comeback, and 22,000 is conquered comfortably. 48,000 also conquered comfortably. Market is in the mid of a rally. They did very minor retracement, and it's very well above the 20 exponential moving average. Intraday price action, if you see, it was a gap up, and then it went volatile, but it was steadily trending up all through the day on both the indices. Today's data has not come in for the institutional buying and selling details, but if I was with sellers since last 4 days, let us see whether they turned any buyers again or not. Today, when data comes in, check out my X Twitter for details. And domestic institutions have been making the all move with their buyers since last 5 days. So last 4-5 days is where the action of moving up. So this rally seems to be being made by the domestic institution where retail money is flowing in individual funds. So it's not 22, it's 2,000. Sorry about that. So today's data will quickly check if it has come in or not. The money control site is the data has not come in yet. Yeah, but most likely institutions, either of them, Fyers or dealers, would have bought in. It could be that both of them were buyers, analysts, dealers, profit booking. So it could be that, because it was a very good move on both the indices. So yeah, position support we already seen. We already talked about institution data. Resistance levels and supports are known. Momentum is the good thing about today is that the Banknifty has retained the momentum and climbed with the RSI above 60, and the momentum is bullish on both now. Trend indicator ADX also RSI ADX indicator also shows that there is a crossover into the bull zones in the case of Banknifty, which had lost that earlier. No, well, it's flattish. So the trend and the momentum is back in the bull zones on both the indices is high rest of the day. Right. So technically, market is extremely bullish with vertical moves, hardly any correction. But yeah, and 4 days of making new highs, right? Foreign money, domestic institution, mutual fund money is coming in, all that. So only thing is you have to be cautious since the correction, market seems to have forgotten about the correction. So it can come in any time. So the more the market moves without correction comes in, higher is the chance of a bigger correction that may get in as a surprise, and then that's why it's difficult to trade bullish markets than the bear markets as a trading. Now, if you look at the major industry sectors, today was a green day, except that for the metal, which is slightly close negative. But if you look at across all the sectors and the short-term momentum, if you check that, you can see that all the sectors are maintaining the bullishness, right? It's outside symbol 60. And the heavyweights have all closed green today. It is all green. Heavyweights are those types that contribute maximum to the indices. If you look at the same, the bullish, the momentum on the short term with daily charts on this heavyweight stock, you can see that, except the bank stocks, HDFC Bank, ICICI Bank, Kodak Bank, and the ITC, like the rest of them, the IT stocks, the Infi and TCS and what is that? Reliance, primarily. And so they are doing great. So it's been so the IT is mainly holding the market, plus along with the Reliance. Right? But there needs these banks stocks also to come in the highlight and get bought in. Only then the market can really go further up from here. I mean, it could be 23 or 25, whatever it is, right? HDFC Bank, it's disappointing that it's hit the top of that consolidation zone, and then it seems like it's worse, not having enough strength to break out and then make me want to happen. It's just not happening when it's happening with almost all other stocks. And also to the US stocks are showing the major Dow Jones dice and the S&P 500 and the Nasdaq. They're showing some red, but remember they're at the all-time highs and at the very top of breaking out. And the rally in the US markets are happening along with how we started the 15%, 16% rally recently. So you have to be cautious. Of course, you have to keep a careful eye on that. Dollar is showing some green spike, but rupee remains to be weak. Gold is consolidating and showing green, but crude oil is falling, which is somewhat okay for the economy as such. Yeah, so any dips will come in. If you had bought, you would have made money again. And investing is all about buying it on the dips, and this breaking out, momentum trading and momentum investing could be done at this time on select stocks after studying the various parameters. Now the direction for the traders, the direction is very, very clear that it's up, only up. So go for spreads or directional strategies rather than non-direction, which may not work out until it's confirmed that both the markets are doing some kind of confirmed sideways for a long period of time. Having said that, even the implied volatility, the realized actual volatility, the different spread is not in favor of the sellers as of now. So go for option buying strategies or spreads, directional strategies, primarily focus on that. And also be careful of the VIX, which is spiked up, which is again divergent with what the market is doing. The market is moving up, which is a bit of a cooler, but that cooler is not coming. So be careful of these two factors, corrections as well as the VIX. The VIX is spiking. There is some fear of heights out there, so I'm cautious about that. That's all I have for the day. And if you're not subscribed and share to your friends and colleagues so that it reaches out to maximum. Right. Happy trading, happy learning, happy investing. Bye bye.